Hi, it's March 20th, 2025. GamblersAdvisory.com, a free site. Also, always 1776.com, a free site. And Money, 1776.com, a free site. Nothing I say in this video should be construed as investment advice. I want everyone to do their own due diligence. Right? Make your investment decisions based on your research. Remember, the opinion you should follow should be your own. Just consider this video to be a second opinion from a complete stranger online. Now let me just point out that I'm deliberately wearing this Toronto Blue Jay uniform. Right? Donald Trump, in an interview recently, talked about how Canada should be America's 51st state. Now, I know we down here have an ego, right, in the United States. We believe that we are the cream of the crop, that other countries would be lucky to be part of ours, right? I need for folks to challenge that thinking. Right? Just understand, we have a almost $37 trillion debt. Right? This is like the bankrupt group asking you to invest in their business. Right? That's where we are right now. The United States is no longer a creditor nation. Right? Understand, right now, Canada can decide for themselves what they're going to do with their land, what they're going to do with their natural resources, how they're going to run their schools, right? How they're going to govern themselves. Why would they want input from 50 states that have never been part of their country? Why would they want to be handed part of our debt bill and told that they have to pay it? Why would they want our troops setting up army bases in their country? Right, folks? Understand that our politicians, including President Trump, mean well, I'm sure, right, have their own agenda. None of us should assume, and I mean this, none of us should assume that any of these politicians have some kind of special insight that gives them a level of thinking that the rest of us don't have. We should question politicians, not defer to them. The idea, if I were Canada, that I would give up my independent sovereignty to join a country with a $37 trillion debt would be patently ridiculous to me. Right? Didn't the United States fight for its own freedom with the Revolutionary War? Didn't we have to keep fighting? Wasn't there the War of 1812? Right, folks? If our freedom was valuable to us, Canada's freedom is valuable to Canada. Right? Let me also point out, too, that freedom is even more valuable when you think about the fact that the United States right now has a almost $37 trillion debt. Now, let's talk about interest rates. You know, I need for people to get past whatever political party they're in or their family has been in. I need for them to view it as a uniparty. Right? You need to just look at the numbers in a very clear-headed and sober way. Because guess what? $37 trillion in debt under a Democratic administration is as bad as $37 trillion in debt under a Republican administration. You still owe the same amount of the bill. So let's talk about it. this year, the Treasury Secretary, and he's brilliant. He's actually one of the best parts of the Trump administration. Right? That's the Treasury Secretary who used to work under Jim Rogers, right? Who talked about how a recession isn't necessarily a bad thing. Right? He refused to guarantee that the United States wouldn't slip into a recession. Let me point out, folks, that there are economic cycles. Nobody, and I mean this, nobody, certainly not some politician whose claim to fame is the number of votes they received or the influence that they got from someone who received the votes. Right? Certainly none of these politicians or economists can tell you with certainty that the United States is never going to have another recession. People who know economics know that that's a lot of balderdash. So let me just point out that the Treasury Secretary is going to have to roll over more than $7 trillion in debt. In other words, we have debt that is becoming due. We can't pay it back. So we have to borrow money to pay it back. And of course, borrowing comes with costs. It comes with an interest rate that we have to pay. Let's be clear on that. So understand, to reduce our borrowing costs, the government wants to manipulate, let me repeat that word, manipulate interest rates. They want lower borrowing costs. They want lower interest rates. It's that simple. Right? Please don't fall for propaganda where people are trying to say, oh, we need lower interest rates for this reason and that reason. I believe the people who are telling you that are feeding you BS. Right? We want lower interest rates because we are a debtor nation. We owe people money. This is no different than you holding a credit card. If you have the power to say, you know what, I've borrowed so much money and I have to roll over this debt that rather than pay 22%, I want to drop the interest rate to 10% so I can save money when I roll over this debt. That's what the government's doing. So you're going to see millionaire Fed Chairman Powell, and he looks like a professor, right? Might have some degrees on his wall. You're not going to find a more self-deluded group than people with degrees from great universities, right? And of course, he's going to talk as if he's smarter than the market. Folks, none of these people are smarter than the market, right? I'm just keeping it real. None of these people. So, of course, he's going to talk about how he's looked at data and how he has made a determination that, the Fed can stand pat this quarter, but they're going to, raise rates likely 2 times in the next calendar year. Right, folks? Let me point out that we've operated in the past, in American history, without a Fed. You want to know the best setter of interest rates in the economy? Folks, it's the free market. I'm wondering why these interlopers are interfering with the free market by stepping in and, trying to portray themselves as having some special gifts that would allow them to allocate capital better than the free market. So let me just say, interest rates actually provide market participants with valuable information. Interest rates tell you the cost of capital. Let's say you're about to borrow money to make a purchase. Let's say you're about to buy a house and you're about to take on a mortgage, right? Well, the interest rate's going to tell you whether the deal is even worth it. There's some transactions you do if the interest rate's 2% that you won't do if the interest rate is 10%. Right? Interest rates are that important. At 2%, you might jump in the water and say, you know what, let me get a 30-year mortgage. Right, folks? At 10%, you might say, you know what, forget this home. I'm going to rent. And you won't be tied in to this asset for 30 years or up to 30 years. Right? Think it through. So let me just say that the interest rate is going to tell me whether to do big transactions like buying a house, or it might tell me not to. Now, in a market where interest rates are kept artificially low, and you know how they do that, you understand that banks are the ones creating money. Right? You understand with fractional reserve banking, several people are lent the same deposit. Right? Yes, our banking system is that fragile. Right? I deposit $1,000 in a bank. Right? Then, of course, that bank lends out the money to other people. So I can't even show back up at the bank and get back my $1,000 immediately, because it's been lent to others. Right? And so what I need for people to understand is that when interest rates are kept artificially low, markets get distorted. So I'm buying a house, I'm competing against other people bidding on the house. I hear the house, whatever the listed price, I'm hearing the financing cost, the mortgage cost, is 2% a year. I might say, okay, great. This is a robust economy. We're not overly indebted, because if we were, the interest rate wouldn't be this low. So since this price point is telling me that this is a good time to buy a house, I'm going to buy a house. Now, what happens if the 2%'s a lie? What happens if the 2% is because the Fed chairman understands that his job hangs in the balance if he doesn't play ball with the government to lower interest rates so we could roll over part of our debt burden? Right? What happens if I hear that I can get an adjustable rate mortgage at 2% and I don't realize that that 2%'s illusory? I don't realize that that adjustable rate mortgage is going to reset in a few years. That, in fact, the interest rate might spike from 2% up to 10%. And then I'm stuck in this long-term housing investment on unfavorable terms. Worse yet, there's an opportunity cost. The money I'm pouring into this house, which I wouldn't have bid on had I not gotten the 2%. In other words, the house price might not have been bid up. It might actually have been cheaper if I wasn't there bidding against other people interested in a house. Right? Well, understand, the money I've tied up in the house, I can't use for other things. There's what's called an opportunity cost. So, of course, I have my money tied up in a house, and there are new financial innovations. Suddenly, here's Bitcoin. Suddenly, here's Ethereum. The government has a cryptocurrency stockpile. Right? Institutional investors now have the opportunity to invest in spot ETFs. I do the math and I realize, wow, with an increasing money supply, Bitcoin, which has a limited supply, might skyrocket in value far more than the value of my house. Right? But of course, I don't have the money to invest in Bitcoin if I've been suckered by a low interest rate into buying a house, getting a mortgage for 30 years. Worse yet, with an adjustable rate. So what I want people to do is I want people to look at the Fed's own M2 money supply chart. Right, folks, you don't have to believe guys wearing Canadian jerseys talking about financing online. You can look at the chart yourself. In other words, the question of, is the money supply increasing, can be readily answered by clicking on the link I have placed in the description of this YouTube video to the Federal Reserve's own site, their own data on what the money supply is, the trend in the money supply. Right, what you're going to find out is shocking. Folks, you shouldn't cut interest rates when the M2 money supply is increasing. Because if you make money too cheap, it's going to lead to inflation. Right? Folks, you'd be stunned to know that since, let's say, 2019, the M2 money supply has skyrocketed. Right? Look at the chart. Look at the Federal Reserve's own data. So what's really going on here? Why do we need to cut the inflation rate, which would increase the money supply, when the money supply is already increasing? Isn't housing already expensive enough? Aren't cars already expensive enough? Aren't Big Macs already expensive enough? Why would we, at a time when the M2 is increasing without a rate cut? That's what's happening, folks, without a rate cut. Why would we want to cut interest rates? Why would the Fed recently announce that it's planning to cut interest rates twice at a time when the M2 is on the rise? Folks, it doesn't make sense. You make money too cheap, and it's going to lead to not abundance. It's going to lead to inflation and misallocation. Right, folks? Let me just say, too, that people have economics backwards. Right? I spend a lot of my time talking to people with varying political beliefs. Right? Many of my hardcore friends have very different political beliefs. That's all good. Right? That's all good. I'm only interested in the numbers, quite frankly. Right? I'm not beholden to any political party. I'm just interested in the economy. Right? Well, just understand, people think that when money is cheapened, that helps the little guy. Right? They think we can all be rich. Everybody can be a millionaire if we just make money as cheap as possible. Right? These folks have obviously never paid $6 or $7 for a gallon of gas like I have. Right? These people obviously don't live in cities where the median home price is already over $1 million. right? These people don't understand that you have many folks in their mid-30s who can't afford a house, right? They don't understand that this generation, in terms of the real price for the house, right? Looking at the median income and the multiple needed to buy a house in your neighborhood. Housing's far more expensive today than it was for your parents. They can't even give you advice, right? The parent who comes over and says, hey, you know what? You should save, buy a house, put that early bonus in a house, right? They don't understand that these days you can't even make the down payment, right? Your parents worked at some job for 20, 30 years, right? Got the gold watch and, were able to attend a retirement dinner and stuff like that. You understand that working for a Mag 7 company, right? Aren't those the ones making the big money? It's like being in the big leagues, right? Folks, I got news for you. The average worker at places like Google is lucky to last 5 years. It's literally like the big leagues. You see the NFL draft, you understand there's going to be some athlete who's going to play for a long time. Some Aaron Rodgers guy who's going to be in his early 40s and is still going to be in the NFL. But you understand that most of the guys Aaron Rodgers was drafted with, right? Alex Smith was in that same draft. The former quarterback for the Kansas City Chiefs. They're long gone from the NFL. They're long gone. And understand, when I say Mag 7, I'm talking about 7 of the most profitable companies in the United States. Right, folks? The jobs are becoming vapor-type jobs. As they say, you're either an owner or a temp. Housing, much more expensive. In part because we started cheapening money during the COVID crisis. And if you just look at the curve for the last 5 years, you're going to find out that M2 is just going up and up and up. There's a dip somewhere along the way. We're out of that dip. It's already going up. Why do we need an interest rate cut? Why do you want an interest rate cut? Shouldn't there be a time where the interest rates actually reflect the risk involved? Even if it costs more to finance our debt, aren't we better off with government understanding that their spending is going to have dire consequences? And so they need to show more control. We should not be relying on some millionaire and some teenagers forming some Doge commission and then cutting everything. Right? We should have a government that structurally can vote on cuts. A Congress that understands that they can't make some calls, have a nod and a wink type of arrangement with the Fed chairman, where the Fed chairman comes in and says, hey, look, we got a lot of debt that we need to roll over. Let's reduce the borrowing costs. Let's cut interest rates, even though the M2 money supply, and again, look at the chart, the link to the chart that I have in the description of this YouTube video, the M2 money supply is already going up. So understand, cheapening money doesn't make us all rich. Let me tell you who it makes rich. The people who already have hard assets. The people who already own things like fine art, paintings, the people at art auctions, the people buying diamonds, the people who own homes, the people who own gold, silver, Bitcoin, Ethereum, limited supply assets. Folks, believe it or not, all of this money printing, all of this growth in M2 is actually making the wealth gap worse in the United States of America. So, to close, let me paraphrase that great philosopher, the rapper Notorious B.I.G. from back in the day. Right? More fake money, more problems. That's what we have right now in the United States. So if you're Canada and the phone rings and it's the President of the United States and he's inviting you to be the 51st state, your response is going to be, player, I enjoy being independent, and I also would not enjoy owing part of your $37 trillion debt. Those are my thoughts. Let me hear yours in the comments section of this YouTube video. Thanks for stopping by.